Welcome to Trading Lounge and the US indices for Monday, October the 24th. And starting with the S&P here, our sort of primary count is wave A here with wave B here. And then looking down for wave 1 with an A and a B and a C wave moving back up into this space here. Now, as a simple A and a B and a C, everything is going okay in that way. The wave 2 here was a little bit big, and I kind of get the feeling I should be putting wave B over here, but we don't need to go there yet with that. I can see for the short term that the market is going to be pushing to the upside. So we also need to be sort of a little bit focused on the last week in October, because there's some of the big stocks, 3M, Alphabet, Amazon, Apple, Boeing, Biogen, Chevron, Coca-Cola, Exxon, Ford Motor, McDonald's, Twitter, Spotify, Pinterest, all those sorts of things are in the last week. So it'll be interesting to see how they pan out. They could be market turners, obviously, so I think it's pretty common knowledge that everyone's focused on those earnings. But what happens if those earnings are good? It could be at the moment, we buy the rumor, sell the fact type of thing with the market. So I can definitely see the markets moving up higher. That's not a problem, and we'll be looking at that in a moment. So one of the other things is that, as we talked about last week, I think Larry Williams was one of them that was talking about having a low in place in the markets. And, I respect Larry. He, got the low along with a handful of other Elliott analysts and other folks at the 2020 low. So yeah, we need to take that on board in terms of having this down as an A wave, a B wave and a C wave here. There are some stocks, as I mentioned this morning, such as Johnson & Johnson, that look quite good in terms of, definitely a corrective wave here, makes a nice ABC and then down for 5. So it's possible this can move up. So the low volatility stocks will be leading to the upside. So the Berkshire Hathaways and these sorts of stocks can be on the cards there for anyone looking at those markets. Now, there are stocks that haven't taken this low out here. So they are stocks like Apple, Goldman Sachs, Amazon. So they haven't taken this low out down here. So I still feel that they need to come down further. The other pattern that I think that we need to take on board, which we've seen in Asia first and then in Europe as well, is actually just having wave B sitting over here. So let's just imagine for a moment that this is the case, and the earnings next week for these stocks are actually pretty sort of stable, and we see the markets actually push up a little bit further. So we move, if we get support on the 4,000 here, for example, then we'll definitely need to see, because from the top to the bottom here is the 61.8% here. So if we get a classic trading levels pattern sitting on this level here as a tested support, that means that we will be going up further. So that it might not be that much further. So the earnings might be sort of okay-ish, and we see this sort of move up a little bit further, and there might be some other event, there might be a crack in the bond pavement or something, the wider spreads coming in and all sorts of things. So it may push up a little bit higher and sort of, we all get sucked in and turn bullish here, so to speak, you know what I mean? And yet it's only a C wave up here, because we're seeing that in the banks. So I can look at, like, first of all, Goldman's haven't taken out this low here, so that's why I feel that this is all unfinished. So looking at this as an A and a B and a C wave, I know it's a long way from the top here, But when we have a look at Morgan's, and I like the banks, using the banks in the bear market, and so because they were the ones that sort of led me into it in the first place. And banks are normally, normally not in the COVID situation, but normally they're the ones that lead us out of the recession because money's tightening at the moment, and this is the tap, where the money comes from, so to speak. So, but you can see here that the top is really just about breached here. So looking at this as the A, the B, and the C wave, it doesn't look a very nice ABC pattern here, but it looks a bit better on this case here. But yeah, so this is definitely an ABC pattern here, and we can see that that corrective pattern here. So it is possible to look at this as an A and a B and a C here. That's all I'm saying. And we're seeing that in other countries, and we're seeing it in our banks now, and we could see, and I can see it in other stocks as well, but we could see it here. So it would play out looking at it like this in terms of, just go to the weekly chart here for a moment, just so we've got a nice clean chart. So looking down here is the A wave, an A and a B, and then a C wave coming up here into this sort of trend line area here, and then coming down here. And the other thing I like about this too is that when I look at the size of this here, if I look at the size of this correction here to the size of this correction, and then the size of this correction here, it kind of gives each leg a bit of equality in all of this. So I kind of like that aspect to it. The other point too is that this was about 8 weeks up here. This is about 8 weeks down here. It depends on how you want to count the top there. So we could probably look at at least sort of 6 to 8 weeks of this one moving up as well. We could end up moving quite quickly in this little space here, but then spending a lot of time churning and grinding up the top here, and before rolling back over again. Anyway, just sort of working ahead of the market and looking at things. So at the moment, there's we've been sort of bullish on the turn down here, and yeah, there's still more bullish. We want to see that retest of that 4,000 there. This is heading back to the front line here, and we'll see how that battle plays out at that point. So just coming back to the daily chart for a moment here. So we can look at this in two ways. We can look at it as down for one, an A and a B and a C, and everything's going fine. I just didn't like the way that wave 2 came in here. It was just a little bit large for what it is, and that might need to be rearranged, but we'll just keep on track to the upside here. We'll be mindful about shifting wave B over here for this. So there's two things that we could look at here. We can put wave C in over here, but as I mentioned, I just mentioned 3 stocks that haven't made new lows below here, so I don't think that's the case. I think we need to come down. As I've mentioned before, the size of this leg here as a wave C and compared to this wave A here, there's no real equality between that. We normally get a bit of equality between wave A and C. I know sometimes you can have it as a 61.8% of that wave A there, and that works, or a 161 and have it coming down further. But anyway, let's just see how it is. I think the Feds have said they're sort of, I don't know, I haven't even read the news about them easing rates or something or other. But we know there's serious problems in the financial system, and they'll never tell you, how bad it is because they just don't want people to panic, do they? They just want to give them a little bit of information and kick the can down the street until you get used to the bad news. So let's go into the intraday. So this is our A and B and C for the B wave up there, and we're counting down here, and we've sort of seen the turn here. The market's come back. The only thing I didn't like about this here is the size of this correction in relationship to wave 1. It makes me feel like I had this over here, but this morning we're talking about it as well. So it kind of reminds me that we should be putting the wave A here and the wave B here instead of using this as wave 1. Then we look at another wave 1 here and 2 and 3. But I don't like the idea of having an ABC for the A wave here, because a wave 2 should be simple and sharp, and it should be a 5-3-5 structure as a simple zigzag structure. So I want to stay with the zigzag structure, but I'm just putting a flag in the ground here, just saying that, well, it wasn't the best looking wave 2 that we've seen, and yeah, it does draw up a few issues with that. Okay, let's just move into 10 and so on. I don't think there's much on the 10 and 5 and 1 and stuff. So, but in a nutshell, here we're just looking for this is, if this is the size of wave 1, we need wave 3 here to be longer than that. The norm, the book would say to in terms of getting targets there, would be looking at getting this down to here, the length of wave 1 here, and then taking this and, oops, a daisy, that didn't stick, did it? That's about it there. See if it sticks this time. Okay, and then put that on the low here, and then you get your target to the upside for wave 3. But look, to be honest, don't get stuck on those sorts of things too much. You're better off counting the structure. It's okay to plonk that up there, you know, but yeah, I wouldn't get I wouldn't form any attachment to that type of thing. Better off counting the structure. And like I said, this wave 2 here, you can see the size of it, the proportion of it compared to wave A. I mean, it looks like a B wave, that's why I put the B wave over here, you know. But anyway, we understand that there's an issue here. We understand that in the bigger picture, we want to retest that 4,000 there, because it's basically market comes down to the 4,000, bounces, comes through and goes back and checks it. That's basically what we're doing. We're coming back and checking it now, checking the supply, because that's how something moves forward, isn't it? It takes the path of least resistance, and it's always checking and checking and checking either side to see like water going down a mountain, you know. So yeah, so let's continue in. We'll go to, won't worry about the 5k, we'll just go to the 1k, and this is where we were last time we spoke. And yeah, I can see how this finishes off properly here, and I will go over that. But this is basically wave 3 here with an ABC for 4, and then 1, 2, 3, 4, 5 finishing off down to here. And yeah, it was just big, you know, it's just too big for a wave 2. Just it's haunting me a little bit, you know. But anyway, we should have a bit of problems at the old high here. There should be some sort of pullback here and then continuing to the upside. We're in group 2 here, so this is the 65, 72 and the 80 here. So the market is firmly within group 2. So it is supported, and it will be pushing up to the next largest number. It will have trouble at the 8, but like I said, that 4,000 medium level is where we're at with this, and on the 100 ticks. So this will be the same, all the issues that I'm talking about here will be the same with the other indices as we go through them. So yeah, so this is our little A wave, our B wave here, coming down to the C wave. So yes, I did get it wrong in here. It just kept extending out. We had all this counted down all right. That was all good, and I had wave 4 here, and it just wasn't ending right. I couldn't figure it out. But in hindsight, it makes it a bit easier once it's done. You know, so we got the A, the B, and the C here. Then 1 ABC for 2, down for 3, 4, 5. And then, you know, it's quite interesting. I mean, you can learn from hindsight. You can see how this has come back and sat here on here. So when we're looking at the 65 here, it's come through the 65. I mean, it's a fantastic number once you get the gist of it. It came through here, retested, dropped back, then it pushed up, and then it came back and tested it. So the long trade here, I mean, it's just hindsight stuff, would be here for that, with the stop here. But normally once that's triggered, then you can bring the stop to here and then to here for that. Yeah, so anyway, just sort of hindsight stuff. And yeah, so it's kind of, this is kind of interesting, this little move here, because kind of got to put wave 1 here in a way, because when the SPY, the SPY and the SPX, they started their wave 2 from this point. So if we just have a quick look at that here, the this is the SPY here, so we're looking at the A and the B and the 1 and the 2 here. Don't worry about all this mess, but that's that 4 shouldn't really be there, but that was something else I was going down another pathway on, so don't need to worry about that. Yeah, so this one here with the SPY, when you have a look at its pattern here, and the SPX, it started from here, so it's moved up here in 5 waves. So when we look at that particular pattern, that this pattern here starts here on this one, so it's this pattern here, but we need to include this one here, so we're going to go all the way up for 1 here in this case. If there's an issue with this, then I'll bring this down here with 1 and 2 here, then 1 and 2, which would probably be the case. So the futures are a bit different than the other markets. But apart from that, this is how we're sort of looking to the upside here. So we're looking at wave 2 here with 1 and 2, and then just building up here with 1 and 2, 1, 2, 3, 4, 5 up here for the 3rd wave, the 4th wave, and we'll put the 5th wave up here around the 3.8. That's where this number's where the problem's going to come into the market. And then we'll have this up here for this, and then we can have wave 3 up here. So as you can see, the main point here is that we are going higher. We're not finished, and we may have to tweak this count to take it up even further. We'll see how it goes. The other point here too is that coming into, this is 65, 72 and 80, that's the shell of everything. What's this, the midpoint here? So then we'll have this other little area here will be important. So when we talk from 7 to 8, we're talking 1, 2, 3, 10, 20 and 30 for group 1. And then the 50, so 1, 2, 3, 5 and 8, the Fibonacci numbers, and then here's our 65 number again, just in here, and then we'll just copy this 72 here and plonk that in there. So this is the other area here that you're going to be facing. So there's going to be probably a bit of a dance to still come from this subgroup 2 back to the midpoint here of sub level, and then because this is a minor level here, the 800. So expect problems in there, but just, you know, you'll just need to give it time in that space, that's all. Once it finds support in that 65, you know, when we talked about it down here getting support back in the 65, that 65, well, that will be the same with this number here, 1 degree smaller in the 65 here, the 3765. Once that gets support there, then you're leaving the 50 and then you're going up at that point, so you can be looking up at the 8 at that point. 8 is a profit taking number. You'll see the bids get hit here, and they'll definitely be hit over here as well, so be careful about this area here. That's normally where short-term traders would be taking money off the table. Okay, so all of that said, we can take all of that and apply it to the other markets. So with the NASDAQ here, once again, the wave 2 here of the ABC is bigger than Ben-Hur, and doesn't sort of fit right. It's kind of, you know, should we be putting the A wave here and the B wave over here for this? So just pointing out that it doesn't really have the right look and feel about it. Do you know what I mean? But either way, we know that this is corrective, because it's got overlapping wave structures, so that means we'll be taking out the top here. So when we take out the top here for the NASDAQ, the 11,500 is the medium level, so you're going to see the market play out across here, so allow for it to swing at that point. And then you've got a little group 2 above here, so we'll still see that continue to push up higher. I mean, even if this was corrective from this low here to this high here, this would be, if that was an ABC here and this is the B wave, then we could expect the C wave to be here. And when you think about it, this is this as an A wave to here, and then a B wave to here, and then a C wave to here. It's got kind of it's got the size of this here compared to the size of this here, and then the length of this one is kind of balanced in a way. You with me? So we'll just, we'll just keep an eye on this particular 5 waves that comes through here. I haven't really pulled all this apart here. There will be problems at the top. Look for support on top of group 1 here, the 300. So a bit of a classic trading levels pattern, a few swings there. As long as the 2 doesn't become the retested resistance, it can come to spike down to 1.5. Always remember that. So you want to keep your stop under that 1.5, that 11,150. Yeah, so it can spike to that point and normally go up again. But yeah, if the 2 becomes the resistance, then you know there's going to be pulled down to the 11,000. But spiking below the 2 is not resistance. It needs to retest it and then fail. So that's the NASI, and the Russell, same again as well. It pulled back down to not the 61.8% from here to here, but from here to here. That was our next sort of target. So that's why I've got the B wave here. So yeah, I mean, if it is a B wave, it's kind of good news for the bears because it does make this here corrective. So the whole thing's a corrective rally. It does look a little bit like 5 waves down here, but the B wave does overlap this, and we really need to work with the S&P and the NASI on all of this. So yeah, we can expect it to go back up to these highs, at least to the 1800 here. That's going to be the thing at that point with it. So yeah, once again, you're on group 1 here, so you can look to go long. The long trade here would have been on getting support on the 1700. You may have had a few attempts at getting this here, so you may have gone, long above here, and I mean, you don't let a winning trade turn into a losing trade. You know what I mean? Breaking even is the max that you go to. And unless there's a plan for a bigger, a different strategy in play. So then you have to start again. You have to wait for that high, come back down, and then you see this little high here. Then you can go long above this one, keeping the stop here. Once that's breached, then you can move it to here. Once that becomes the support by taking that top out, then you can move it to that one. Once those tops are taken out here, you can add to these, then the stop can move up to this one. So same as this one here. Once that number there becomes the support, then you can move the stop to it by taking out the top. This is a classic trading levels pattern here, the arrival, the reaction, the first high above the level, the ABC pattern, and offwards at that point. So the long trade here. So all same. Easier said than done though, I understand. But if you're new to trading, you shouldn't be trading with leverage, and if you do, make sure you use a demo account until you get things really sorted, until you consistently can make money, as they say. I find day trading hard. I mean, sometimes I make money, sometimes I don't. I just do it for fun though. I don't do it for making money. I use stocks for that. I like to stay in a trend and close my eyes and see what happens. So that's the Russell, and the DJ is much the same as well. And we did talk about trades here and taking a bit of profit and staying in the trade, and so we had the stop down here. But now this has been, you see how this has come down and it's taken the top out here. So that means that we can move the stop from here, and we can move it, to here, but we can move it up here as well for that. So we had to leave. We did all the right things. It was a good exercise, really. I don't think anybody would have stayed in there all that time, but anyway, it's just a case study, isn't it? Really, more so. So yeah, once again, a really big wave 2, and we're still need to move to the upside. When you get a big correction like this, I mean, the good thing about them is that really from that low to over here, really that's really all the accumulation stage here. I mean, technically would probably just do it from here, but the bigger the correction, the bigger the next trend, the safer the next trend, and it will be big as well, because the accumulation process that's been through here. So a big, horrible, nasty looking correction is really the thing that you need to fall in love with, you know. That's where the trend is going to be engineered from at this point. So yeah, look, it will probably do a bit of a dance at this area through here and come back and test it and so on. I suppose this would be the target area, the next stop after this one here. Yeah, I think minimum wise we can really look to, you know, that distance here with this. That would, I think that's something that we could like, you know, look to, just in case this B wave is over here at this point. Look, it may go up much further, but we just got to move step by step. You know, we can only move based on what we know, not what we think. Alrighty, that's it. Thanks for tuning in. Cheers.